Joining me now are Greg Ip, the chief economics commentator at the Wall Street Journal, and Bill Lee, chief economist at the Milken Institute. Greg, welcome. We haven't even seen the Main Street program get off the ground yet, and yet the news flow in the stock market is turning more bullish lately.
Yeah, and I think you have to give the Fed some credit for that, because the Fed obviously can't solve the pandemic, much less reopen the economy. But I think its programs have resolutely demonstrated that it's not going to allow a liquidity crisis among financial companies or corporates to become a solvency crisis. That's clearly had, I think, a positive impact in the credit market. That's probably spilling over somewhat to the stock market. I mean, I'd love to hear what Jay Powell has to say in a half an hour from now when he comes out of this meeting. Obviously, what he's going to do with Fed policy is going to be important. I mostly want to hear, though, what he thinks about the economy. There's just so much uncertainty out there, and he is one of the people that people still trust to give it to us in a candid way. Yeah,
Bill, I thought your observation here was interesting, that the Fed missed an opportunity to distribute funds authorized by the CARES Act more efficiently. What do you think we're learning as we navigate this early period?
Well, the Fed learned this lesson to go in big and go in early from 2008. So it's managed to reassure markets that everything's going to function right. But what it didn't seem to take into account were the bureaucratic snafus and loan issuing policies of these big banks. And that's sort of misdirected funds and delayed funds from being dispersed. We could have used securitization and have a whole host of financial engineers out there directly issue these loans to the companies that were asking for them, and then have it securitized. That would have bypassed everything. And since the Fed is in the markets reassuring everyone that they're going to be a buyer of last resort, even in corporate Main Street loans, right, we had a guaranteed market. And so the distribution would have been done much more effectively, efficiently, and fairly.
But Greg, you know what? I listened to that. I think Bill is most certainly right about that, but that the Fed would have gotten all of this criticism about simply bailing out big business and not helping Main Street. They specifically chose to call this a Main Street lending program, and it's aimed at companies with 500 to 10,000 employees. That is vast swaths of America that can't necessarily, issue the kind of debt that Bill's talking about the Fed purchasing. So I understand the intent here, but do you think that it's going to end up? Are they going to be able to distribute this $6 trillion efficiently?
Well, first of all, I don't think we should be blaming the Fed for the problems we've had with the small business lending program, which actually does not involve the Fed.
Right.
That is entirely funds by the Treasury via the Small Business Administration. And in fact, you might argue that some of the administrative problems the SBA has been having are actually vindicate the decision of the Fed to go slowly. It hasn't even launched the Main Street lending program yet.
Right.
And as for the corporate lending programs, they're already having a positive effect. But that said, as they roll out these programs, absolutely, they're going to encounter some of the problems that you and Bill have just discussed. There will be people who said that the program was too scattershot, it gave money to people who didn't need it, and those who will say it was too narrow and didn't get to where it was needed. I think the attitude of the Fed right now is let's err on the side of doing too much, and it will be a nice problem to have at the end of this process. We're saying we help the economy too much.
Bill, at the same time, like Greg said, there's been a ton of criticism about the PPP program, and I definitely think it's going to play in to the election season this fall in terms of who gets the blame for how that was administered. Even if the majority of the funds were well administered, the impression everybody's left with is that the money was misappropriately allocated. So how does the Fed, which has been trying to take comments and not repeat those mistakes, they're still going through the banking system, how do they avoid the same outcome?
I think they're hoping to promise a lot and do very little. And I think that's the notion of having to allow a lot of financial institutions, banks and non-banks, to package small business loans and then have a market created for it and have the Fed be one of the buyers. That's one way to distribute small business loans much more effectively than having to go to Chase and all these large banks where they get chopped out by their Chase's big clients.
No, that's a great point. So you're saying use the securitization, but
yes,
bundle up all the small business loans and sell them off. You always come with good ideas, Greg. I will leave it with you, which I thought was a clever thing that Bill just said, and I've been thinking about it. Is it better for the Fed to promise a lot but have to do very little? Look, they haven't even launched some of their corporate bond support programs yet because the market just simply knows that they have a backstop. They can just say whatever it takes and not have to do much.
Don't you remember when Mario Draghi said, we will do what it takes and believe me, it will be enough? The Eurozone crisis was over before they bought a single bond. Look, the central banks have this amazing thing. It's called a printing press. And if they're willing to run that thing fast, they can do a lot.
That is food for thought as we get this decision today.